In the last 2 weeks, Bed Bath & Beyond has come close to tripling. AMC is up more than 60%, and GameStop has jumped by more than 15%. Right now, we want to talk about what's behind the pickup in trading and the state of the retail investor. For that, we welcome Joe Moglia. He's former chairman and CEO of TD Ameritrade. He's also the chairman of Fundamental Global Investors. And Joe, this has been kind of an unusual turn, maybe one that a lot of people didn't see coming. We had kind of written the retail investors off, thinking that they were down and out, but that may not be the case. What do you make of all this meme stock activity?
Morning, Becky. I think when the leadership within the meme world, the Reddit people, do a good job and put together a good trade with good thoughts, good ideas, there's reasonable shorts in the marketplace, I think meme can still put on that type of trade and wind up doing well. However, the issues that we had with them several months ago wasn't because of what was going on with the meme world, it was because the markets were going down. So anytime you have a day trader, in effect, getting involved, they have a position over the span of the day. Maybe they get out at the end of the day, maybe they don't. But as the market goes down, that becomes an issue for them. Now, the exception becomes the individual stocks. And if you recall, when the whole GameStop thing happened, one of the major institutional investors really had gotten hurt with that. So I think the institutional world woke up from the meme world because they recognized that they could get caught in a really serious short squeeze that in effect could put them out of business. So there's still opportunity for meme, but the day trader world, I think, is going to have more pressure. And I don't know what the exact staying base would be, but I do know that there are not as many today as there were 3, 4, 5, 6 months ago. So you look at Coinbase numbers. Coinbase, who has a lot of day traders, they had reported a 30% drop in their daily trading activity. You look at what happened with Robinhood, whose entire business is pretty much that type of trader. You know, they lost 2 million, almost 2 million active traders from one quarter to the next.
Joe, come on. These meme stocks, are they not a measure or a gauge of craziness? I mean, when your kid comes home and says, "Dad, I bought GameStop," nothing to me seems like a better signal to sell than everybody getting out with these crazy. I mean, when I see that board they just put up, I'm like, really? Is the craziness back? Am I missing something here, Joe?
I don't think so. You go back again to the dot-com boom. Remember, you'd be in a cab.
We got up here.
Yeah, you'd be in a cab. Well, you'd be in a cab, and your cab driver would start to give you thoughts or ideas. You'd be in your haircut, and the barber would start to give you thoughts and ideas. But I tell you this, if my son came home and he said he quintupled his money in GameStop, I'd probably give him a little money to help manage for me. So it's a great trade, but it's a little bit like gambling. You know, you're taking a shot on a particular name because somebody's guided you in that direction, and you're hoping it goes up. Now, do you know when to get out? Do you know, should you have stop losses? So is it a game? I don't know if it's a game, but I do think it's far more like Vegas than what it would be in terms of than would it be like an investment.
Joe, let me ask you one more quick question, just in terms of shorts. It got really scary to try and short things because you knew the retail investors could run you out. And I think a lot of maybe some of the more tried hedge funds were not doing shorts that they might have done in the past. Is that coming back, or is this still way too treacherous of a market to try and short anything?
Oh, no, I think the sophisticated institutional investor, Becky, that really knows what they're doing, you know, they'll be on top of that. What they found out with GameStop several months ago was that all of a sudden now retail is a risk to the individual, to the institutional investor's position. That wasn't something they were thinking about before. Because they're thinking about that now, well, they're the ones responsible for themselves. They're the ones that they're supposed to have enough expertise and sophistication to know when they're taking on too much risk or not. But I think that was a big lesson